All right, here we go.
Andrew, welcome to the show.
Thanks for having me.
Happy to have you here. Happy to have you kick this off.
You got it. So I got a little joke for you.
All right.
So what do you do when you have to evict a cat?
I want to say something funny that I know is incorrect, but I can't think of anything.
You just want to say something to make all the kids go crying immediately? What?
You offer them cash for treats.
Cash for treats. Adorable. This joke approved by the ASPCA. Well, thanks for having us in your war room.
Of course.
This is cool. You've built quite a business for yourself.
I have with the help of my good partner Zach. We've built quite the organization.
We're excited to chat with him a little bit later. But yeah, so you got about $60 million in assets under management right now. Is that what you said?
Yep, that's correct.
And you did it in like about 4 years.
We did it in 4 years. Yes.
That's really awesome and a lot faster than I'd say most people in the business. What do you what do you contribute so much of the success to?
I would just say leading with value. Like we constantly lead with value with everything we do, right? We do a free real estate meetup once a month, open to the public. Zach and I mentor people. I currently mentor 10 other real estate investors free of charge. I put out a ton of value on social media. I probably have over 700 posts of me just providing free educational content, right? And just that compounds over time where people start to believe in you, trust in you, think you're a subject matter expert. And that translates into your ability to take down larger deals.
Nice.
Yeah. What's your monthly meetup?
So my monthly meetups, Worcester Simplified REI. We've been running it for about 3 or 4 years at this point. Yeah. So it's pretty much a staple in the market. And we normally have around 50 to 60 attendees.
Nice.
You do it at the brewery, right?
We do it at the Bay State Brewery the third Wednesday of every month. It's a great place to find partners, to find vendors, and just, it's just a great place to just, chat with like-minded people.
Yeah.
And that's, because you're with Candor Realty, right?
I am with Candor. Yes,
Okay.
I'm the Worcester team lead. So I got like about eight agents under me or so.
Okay, cool.
Yeah.
Because we spoke at one in Waltham.
Okay.
Because a simplified REI meetup has different locations. Is that how it works?
Yep. You probably spoke with Todd Wheatley, hosted that.
Yes.
Yeah.
Cool. Yeah. And that was a pretty cool location too.
Yeah.
I've been to the one in Worcester a couple times.
Yeah.
Yeah, it's
cool.
good. It's cool.
Yeah, sorry, I think I missed that one.
That's all right.
I'm the local one.
That's all right. Yeah, whatever.
I'm in Sutton.
Oh, okay.
Right down the road. Yeah.
The last one had a gentleman that was buying his first little hotel in the Dominican Republic. That was the last meetup?
Yes, that was Frank Palatino. That was Frank Palatino. Yeah, he was buying a hotel internationally in what you said, Dominican Republic?
Yeah, I think that was it.
Yes. And that definitely taught me that I do not want to buy hotels.
Yeah.
Right? Like try doing business in the United States. Like think about doing that in another nation. It's extremely more challenging. So after hearing that sort of experience, I am thankful that we get to do business in the United States because everything is a lot more straightforward.
Yeah. Did he have ties to the Dominican Republic, like family or from there, or just like was like I like to vacation there?
I believe his partner was actually out there. So,
so there's something.
There's a bit of both, though. He definitely lifestyle by design investor.
Oh, yeah.
Sure.
Totally.
What about hotels is not appealing? Even if they were, let's just say one was local.
So, I got into real estate because I wanted as much time freedom as possible. And, hotels, it's the hospitality business. You're at the beck and call, of your clientele. So, because of that, it's just not the right business model for me. I chose multifamily investing because it's a nice spectrum of, cash flow returns versus time commitment, right? Like, other aspects require more time. Other aspects will give higher returns, vice versa. And this was kind of a nice balance for me, especially when I started in real estate. I had a W-2 job. I worked a full-time job. So I had to, come up with some strategy where I could balance both sort of activities.
So earlier you were mentioning in your old job, you think that helped kind of set you up for this company that you're running. Mm-hmm. Tell us kind of like what were you doing?
So prior to real estate, I went after the American dream where I got a good education, I got a good job, I got my master's, right? And I made six figures. I got a condo in a city, right? And my job was I was a grant manager at the Broad Institute of MIT and Harvard. I was a project manager for research labs and grants, right? And the reason why that really set me up for success is because I managed research labs, like their whole financial picture, applying for grants, getting grants, doing the budgeting, doing the financial management. And it very much taught me on how to do that on an asset-based level, which translated over to managing multiple real estate assets, right? It was extremely translatable, helped me out a ton.
Where'd you go to school?
I went to UMass Amherst for my bachelor's and Emmanuel College for my master's.
Nice.
Yes.
Where's Emmanuel College?
Right in Boston.
Oh, okay. Cool.
Right in Boston. Yeah.
Yeah. We hired an intern this summer from the zoo.
Oh, okay.
Yeah.
Nice.
Yeah. From UMass.
Well, they'll definitely teach you how to party. Tell you that right now.
When did you go there?
2009 through 11.
Oh, okay. Same time we were in school. Well, I was like 2009 to 14. Yeah.
Oh,
Bit of a long
you were
time.
UMass?
No, not there. We're from down south, actually. We're from North Carolina, South Carolina.
Oh,
Yeah.
nice.
Yeah. The same time frame.
Southern boys.
Yeah.
There you go.
We spent some time at UMass, like an evening.
Of course.
Afternoon.
Everybody does, right?
2016.
I think
One time. That was the last time.
Slept in our car.
I think when I went there, they had this thing called the Hobart Hoedown, which was they had a huge block party in the street, Hobart Street, right?
Yep, behind all the townhomes.
Yes.
Yep.
Yes. Yes.
We've been there.
Yeah, and it was great.
Allegedly.
Yeah, it was great until the police took notice, and then tear gas, breaking up parties started happening, and it got a lot less fun.
We must not have been there late enough for that.
Yeah.
You lost your phone in the first 5 minutes.
Yeah. I dropped my phone.
5.
I realized I dropped it. And then I started asking people, I'm like, hey, anybody see a phone on the ground? It's like a huge group of people.
Yeah.
And someone actually goes, I did, but I saw someone throw it like across the group.
Oh.
And they did. And it was like out there somewhere and I never got it back.
Oh.
Yeah.
Dude, kids were throwing like full bottles of beer, just like chucking them up into the air. And I'm like, man, I'm too old now. I'm like, the first thing I thought is like, this is just really dangerous. I've outgrown this party. Okay, so cool. So I think one thing that we found really interesting is you said you've got, all in all, your team's about 20 people strong.
Yes.
And you feel pretty comfortable, and that's what you like, the team building side of things.
I do.
Yeah, you're a little larger than we are as an operator right now, but would love to learn kind of like what have been your experiences growing your team to get to that size?
Sure.
And what have been some of the growing pains and lessons along the way?
So when Zach and I first started this organization, I think we had about 100 units or so. It was him, myself, and I did everything. And it became absolutely exhausting. So at a certain point, really, we're intentional about the fact that we had to build a team, right? And at that point, we ended up hiring a consultant to help us build the organizational chart, to help us build the right practices in place to hire the right people, right? So we actually utilize this software called the Cultural Index, which is a personality test, right? And it allows us to filter people based on the correct personality and strengths and weaknesses that we want before we actually hire them for the role. And that has really been our secret sauce for hiring an all-star team, right? We literally filter out, 90% of the applicants to the top 10% that actually have the skills that are successful in that role. And then we normally pair that with a test project. And when we do that, we really get some really high quality people. And combined with that, we were really intentional about our org chart. So we're really intentional about, putting the right people in place where Zach and I can really sit in our genius. Zach's genius is stabilization, is operations, things of that nature. And my genius is financing, capital raising, really growing the business, finding opportunity. And when we were really allowed to sit in our genius and delegate our weaknesses and things that took energy away from us, our business grew exponentially. So that's kind of been the secret sauce. And, more or less, I think the main reason why we're so successful and able to build our team so quickly is we really focus on leveraging our team's strengths and identifying their weaknesses and figuring out strategies, processes, maybe other people to mitigate their weaknesses so they can actually sit in their genius zone.
Well, smart to hire a consultant.
Yes.
Yeah.
Yes.
That's, I like to hear other people's stories and then, internalize them and like sort of use it as like as like a mirror to like think about, okay, how could we have done things differently, or we can't go back, but like how can we be better moving forward? And a little bit of a difference for us was that like we didn't like sort of start really structured. It got really chaotic, and now we're like trying to backtrack and make it more structured. And it's not necessarily like one way can certainly sometimes be easier than the other, but I'm understand, like right now today in our business, I understand the value of consulting, and something like the person that you hired for at that time, like how smart that seems now. Whereas like 3 or 4 years ago, I wouldn't have understood the value that someone like that could have provided.
Yeah, when you're just full of piss and vinegar.
Yeah.
100%.
Yeah, I mean, I think going into that and hiring the consultant, our main intention and our main goal was to create a business that was self-sustaining and didn't require our time, right? And that goal, I think we ended up paying 20 grand for this consultant, which people might think that's a lot of money, but to have our time back, to build an organization where, Zach and I have the option to work is worth 100 times more than $20,000 in our opinion. Right. So it's been incredibly helpful. And, I think people don't quite understand, the value that, some consultants bring.
Totally.
Yeah.
What's your org chart look like? Like what's your kind of general structure? Because I mean, that if you're going to own multifamily,
sure,
operating it is not just like, it's not a 7 or 8% line item on your trailing 12. It's like actually 99% of what you do.
Yeah.
So I'm curious how you have your org chart set up and like roles and responsibilities.
So our secret sauce with why we're able to provide the returns that we are is that we're vertically integrated. So we take all of the property management in-house, right? And in regards to our actual org chart, the way we structured it is I'm at the top. I refer to myself as the chief collaborative officer. I'm not really directing anybody. I'm collaborating with people along the way. And then underneath that, we have 3 main branches. We have operations, we have administration, we have finance, right? So we hired a finance director in Colombia, fantastic person. We hire him probably 50, 60 cents in the dollar because he's international. We have an administrative director in Ireland as well. And then Zach, my business partner, manages the operations. And then underneath that, there's different roles, right? So underneath finance, we have bookkeepers, we have treasurers. We're currently in the process of hiring a comptroller. We also have a fractional CFO that we hire on a monthly basis that helps us with financial direction. Under our administrative assistant, we have, customer relations with the tenants. We have a whole bunch of virtual assistants that help with a lot of the back office items. And we also have an investor relations person as well who works in the Philippines. And then under Zach, we have about 5 property managers throughout our entire portfolio. And under that group, we have we have a maintenance crew of 2 employees that we give them pretty basic jobs like flooring, paint, nothing crazy, but they just help us save costs on like unit turns.
Totally.
So that's kind of the makeup of our team in a nutshell.
2 maintenance personnel per property manager, and that property manager is regional to where the assets are.
So we don't, ultimately we don't want to take on the responsibility of, all of the responsibility of turning units, of having contractor insurance, of having liability, right? So we hire a large majority of what we hire is third-party vendors. We typically have the in-house maintenance people for, like LVP, paint, very, very basic things that, really have a good ROI. Yep. Like unit turns, right? Yep. But we primarily use third-party vendors intentionally because if you have that in-house, like you got to really think about it. Like your costs go up, you have to have more insurance, you got to have workers' comp. Like it starts adding up when ultimately I'd rather pay a 10% delta to my vendor and have them manage all that process. Right. So,
what have been some of the lessons you've learned hiring contractors?
So, I've learned hiring contractors that you definitely got to treat them right. Right? Like I think Zach and I, out of any investor I know, we have one of the best account payable process where we instantly pay contractors right away, right? And the way we achieve that is we actually utilize a software called Deluxe, which is like an e-check that allows us to email checks to vendors, right? But contractors' biggest gripe is they want to be paid on time. Right? They have a lot of money upfront for this particular jobs, and they want to make sure they get their money and they can move on and continue the project. So we are extremely good about paying our contractors. right? Additionally, when it comes to hiring good contractors, this is really putting them on a comprehensive payment schedule, like a third, a third, a third, a quarter, a quarter, a quarter, because ultimately, if it's not working out, we get them another contractor come in and pick up the slack and really not lose out that much from a money perspective. We had been bitten in the past where we've, didn't do the contract right. We paid a lot of money up front and, the contractor ran away with our money. So those are kind of some of the best practices that we ran across with, keeping good contractors as well as, organizing the payment structure where incentives are aligned.
Yeah. The e-check thing is really interesting. Yeah. We've been kind of archaic with our payment methods for a long time. Mm-hmm. And, either relying on them to have like a House Call Pro or some platform where, because that's great because they invoice via email and you could just pay it through their system. But like if they didn't and they're just texting us an invoice, it's like, okay, well, I'll have to get you a check and they don't want it to be mailed, they're like, I'll come pick it up. And it's like, well, I'm not there. Yeah. But there's, I've been looking into a lot of different systems. I haven't looked into the email check method. But there are a lot of different other platforms or just like having a bank that has like a streamlined process. Bill.com is an interesting one.
I hear good things. A few of them. I hear good things about Bill.com for sure. But yeah, I mean, we all we do is really just create an accounts payable email. We have all of our contractors email it directly to that centralized point. We reconcile it every Tuesday and Friday, pay the contractors, and it just goes very, very smoothly. Yeah. So, yeah.
That's awesome. What kind of deals are you guys mostly taking down? Like buildings that are typically mostly occupied with like some value add along the way? Is that kind of what you're looking after?
Well, we love properties with hair in it, right? We're always looking for value add multifamily. We typically purchase, 2 to 50 unit properties. It could be portfolios. It could be small residential, 2 to 4. It could be 5+ unit properties. And there's typically some value to be made, right? So for these 2 to 4 unit properties, a lot of times these are kind of fix and flips, we try to sell them to house hackers. The great thing about multis, they offer multiple exit strategies where we can, if we can't sell it, we can throw renters in there, and then with the 5+ unit properties, we're typically trying to buy a 20 to 30% discount on a price per unit basis, as well as rents are depressed by 30, 40, 50%. And then, during our stabilization process, we make up the delta with those rents we bring in the market. And, when, as you both know, commercial property is valued based on the income of it, right? The income approach, right? So if we bring the income on the property up, the value of the property comes up at a prorated rate. And we usually increase the value of the property and suck that out in the form of a cash out refinance or a sale. So that's typically our business model. We buy value add multi, like I said, ranging from like 2 to 50, 60 units.
Yeah.
Yeah.
Right on.
Yep.
Most of your deals, do you have are you kind of like buying to hold indefinitely, or do most of your deals have like a predetermined exit or timeline?
So it depends on the business model, right? If we're fixing and flipping value add residential 2 to 4 unit properties, I mean, a lot of the times the play is either, burn or sell it. Most of the time sell it, where interest rates are at right now, right? If it's value add multi, 5+ 5+ unit buy and hold sort of situations, our goal is to keep it as long as possible. And either, if we are going to sell it, 1031 into another asset. We're currently in the process of actually 1031ing about 4 or 5 different properties right now. We're trading a couple 6 units in Providence for 11 units in Grafton, Mass. I'm trading a 3 unit in Worcester for a 6 unit in Worcester. We got a 12 unit in Central Falls that we're trading for. What are we trading that for? I think we're trading that for 11 units, and we have a 6 unit in Worcester that we're trading for 16 units in Lawrence. So we have a lot of 1031s in the works.
Cool.
How long did you own those buildings before you started the 1031 or?
I think 8 to 12 months.
Really?
Yeah, because I mean, we got the rents to market. We improved the property. It's at its max value at that point, so there's really no upside. So we thought we'd just take our chips off the table, trade into something else where we can create that value and we can multiply and increase the velocity of our capital.
Are you when you're going to sell some of these assets, are you listing them yourself? What's your sales process? So we typically, I'm a Worcester lead, of Candor Realty. I have 8 agents work underneath me. So I typically have one of my agents, list it for me. Got it. It's typically how we go, right? And, what I will say is like, listing,
you can go with the discount agent for 1%, right? But a lot of times, if you actually go with the high producing agent in a market and you actually pay them 2%, you get way better results, right?
Sure.
So I think like we're learning that like, yeah, we could go with the discount agent for 1%, keep it in house, or we could actually hire a extremely high producing agent who knows all the people in that market and really sell it for a lot more, right? So we're doing that in Boston, we're doing that, in Worcester, and we're having a lot of success with that.
Yeah.
Yeah. Because they're just going to have people in their network that are going to know and trust them
Exactly.
on the transaction.
Exactly. So yeah, it's a lesson learned. So.
Yeah, and it takes a while for even if you're new, it takes a while to be able to become that person. You have to grind through being the new person.
Yep, totally.
Yeah, we like to give the sale back to the agent, especially if they help brought us the deal. That's a great way to build relationships and keep them feeding you deals without having to like actively hunt.
Yeah, no, that's a fantastic point. That's a great strategy as well, for sure.
Yeah, it's a great commission for any of these condo deals. 1 acquisition fee, and then you get 3 on the back end when you sell it.
Right.
Yeah, totally.
And I'm like, oh, you guys made more money than we did.
Should have been a broker.
Maybe.
What about your tenant relationships? Because in these tenant, like for our assets, I know that tenant relationships are just so important to make sure that, your returns rely on you being able to collect at the very beginning. That's sort of the first point of contact. Your expenses are going to be your expenses, and you can control that. But making sure you get paid is like most important.
Of course.
How have you built good tenant relationships? How do you underwrite tenants that you place? If you have to, if a tenant is renting a unit for $800, it should be $1,500. How do you navigate that? What are the chances they move out? What are your thoughts on all that?
So a lot of the buildings we buy where, the rents are depressed and you have all inherited tenants, right? So whenever we buy one of those buildings, we make it intentional to meet every single tenant, set up tenant meetings and meet them face to face, right? And we typically utilize the binder strategy, which I'm sure everybody here is familiar with, but I'll just explain it real quick. So, you meet the tenant, you go over, it's great to be a landlord, here's our expectations, our expectation is you treat the unit right, you pay on time, and your expectation is we fix your issues in a timely manner and we treat you with respect. And as long as that relationship happens, we're going to have a fantastic relationship. So let's talk about your unit. First of all, are there any issues associated with the unit? They usually give you a laundry list. A lot of it's small items. My window's broken, my faucet's broken. Like, I'll pay a couple $100 all day to buy goodwill. Right. And then once you have that conversation, then you really give them comps. You're like, all right, for this unit, I could get $2,000, right? You're paying $1,000. Like, what do you think makes sense? And the key there is to get them to propose the rent increase, right? Because when somebody's proposing a solution, there's way more buy-in than when you're instituting a solution, right? So the goal is to get within that 50% mark. So in this particular example, it would be around $1,500, right? And then we get to keep the tenant, don't have to renovate the unit, and we get the rent close to market. And then the plan is to fix the items they mentioned. And then in 9 to 12 months, have a similar conversation where you get that, get between the middle of what market is and where they're at. And then at that point, you're only a couple $100 below market, and you save the costs associated with turning the unit. Right. So that's typically our strategy on how to establish good relationship, as well as to manage inherited tenants.
Yeah.
So are you normally looking to have the tenant potentially propose their own rental increase in that first meeting?
Yes.
Alongside getting a list of any like maintenance issues or repairs required.
That's exactly correct. Yes. We definitely want them to feel like they're heard, they're respected, they're appreciated, right? And that's the goal of, fixing their items, right? But it's also a reciprocal relationship, right? There's a give and take with any sort of relationship. And if from a human perspective, if there's a take, there's typically a give, right? So that whole dynamic happens a lot smoother when you kind of incorporate that methodology.
Right. Because even if the tenant if you don't pursue that and you just say your rent's going to go from $1,000 to $2,000, and they say, I can't afford it, I'm going to have to move out. Then number one, the relationship didn't really start really good.
Yes. And
they might just stop paying for the 3 or 4 months while they're trying to find a new apartment, and you lose out on that. And then if you say, okay, if I could have just been losing out on $500 a month by agreeing to this, Now, what's that times 12 is $6,000 a year. But the cost of turning the unit's going to be $10,000-12,000 you know, if you have to rip out cabinets, like rip out carpet, refinish flooring, put in LVP, like maybe there's like more significant damage than the tenant is really letting on. It ends up taking you 2, 3, 4 years to make up for that lost rent just for that first year.
Exactly.
So I actually, I had never heard of that strategy. I mean, I probably had conceptualized it in my head to some degree, but I never heard of it called the binder strategy with that specific sort of system in place until like the other day. I read, you probably know Kyle Curtin, I think.
I'm familiar with Kyle Curtin.
Yeah.
Yes.
He posted something about it.
Shout out, Mr. Curtin.
He's part of. He's in Candor.
Okay. Yeah. He's a hustler. He's a young kid.
Yeah. He's like 25 and has like 11 doors or something.
Yeah.
Yeah.
I don't know. I haven't met Kyle. I don't think so.
I connected with him a while back. Saw him at a meetup once.
That's cool.
But, you know, follow him on Facebook and you read people's stuff. You like to learn. I like to learn, you know.
Yeah. That's cool. That's when we got started. 24, 25?
Yeah.
24. Knocking on doors.
There you go.
Brockton, Massachusetts.
I'm from Randolph. I know it well.
Yeah. You ever done any deals out there?
I have not.
Yeah.
No.
It's really hot market now. Really, like, 8 years ago, it was, $300,000 for like a 9-bedroom triple decker on the west side.
Yep.
And now they're over $1 million.
Yeah.
Brockton.
I mean, hey, proximity to Boston matters.
Yeah.
Right?
2012 to like 2018, 19 was like the most amazing time to buy in Brockton. Like looking at where they're at now.
Yeah. Seriously. But it's interesting because even in Western Mass, I mean, 2 families are now like pushing like over $400,000 and they weren't that a couple years ago. So we're the push is pushing.
Yeah.
It is for sure.
Yeah.
Yeah.
Worcester's blowing up like crazy.
Yes. Yeah. When I first got into real estate, like I knew I wanted to invest in a multifamily, right? So I was like, all right, I got to choose a market that has a lot of multifamily, right? There were a couple options. There was Brockton, there was Worcester, there was Fall River, right? There was Manchester, right? Like, so I had so many options, right? I ended up deciding on Worcester, and like, thankfully I did. It's one of the hottest markets in Massachusetts. But yeah, I mean, I kind of just lucked out. But, in any event, I would say if you're trying to get into any sort of asset, like choose a market that has a lot of that asset. It's way easier to expand and grow.
Yeah. Worcester's great too because the rental market can support a lot of the new construction.
Yep.
And so if you know how to create value by adding density, this is a great market to explore.
Yeah, I mean, the great thing about Worcester is it's a nice cap rate where there's a nice balance between cash flow and appreciation. Because as everybody knows, when it comes to cap rate, it's very much connected to cash flow and appreciation. The lower the cap rate, the higher likelihood of appreciation. The less cash flow, the higher the cap rate, the lower the likelihood of appreciation and the more cash flow. And Worcester's right in that nice little balance area where, the cap rate can support new construction, right?
Yeah.
Right?
Yeah.
Yeah.
What are you seeing on cap rates?
Nice.
Is that your question?
Yeah. Nice.
Yeah. Like when you stabilize something and you go to refi it, what are you seeing on your cap rates?
In Worcester specifically, your cap rate's probably ranging between 6.5 and 8. Depending on the area, depending on the market, depending on the asset. Obviously, like a nice building, all brick, one building is going to trade at a lower cap rate than a portfolio of a bunch of smaller multis, right? So, in regards to what am I seeing for cap rate, I mean, that's the range. And obviously, as you leave Boston, it expands, right? So, I would say caps out in Worcester at an 8. And then as you go far Western Mass, you get, 9, 10. I think North Adams, probably like a 10, right? So, I mean, that's typically what I'm seeing in my market.
Yeah.
Yeah.
We can buy them in those higher cap rates.
Yeah.
We tend to go more distressed, but we're seeing post stabilized cap rate valuations like 7 to 7.5 out there.
Out where?
Western Mass.
Holyoke, Springfield.
Post stabilization 7 to 7.5.
Yeah.
That's what the appraiser says.
That's it's expensive.
We've had quite a few.
Good if you're going to hold.
Yeah, great for hold, great for the refinances.
Yeah.
Absolutely. I think the biggest thing and it is expensive because like most times the 7 cap isn't really going to necessarily excite most people to get into.
Sure.
But it's a great tool to know what your back end value can be.
It is.
You know, because your value, like you said, distressed unit, distressed rent. The lower the more distressed you can buy it. Typically, the more equity you can create. We like vacant stuff if possible.
Yeah. I mean, and you guys bring up a fantastic point, that the power of the income approach, right? Because the way the income approach works is like we have a very good gauge on when the end valuation is going to be, because it's a comparative against the net operating income and the cap rate. Both are variables that we can anticipate, right? Sales comp approach, it's extremely hard to anticipate where that's going to land, because it's not based off facts, it's based off subjection by the appraiser. Right. So like I think burring properties based on the income approach right now is the safest bet if you're trying to do the burr versus, you know, trying to do that within a 2 to 4 unit residential property.
Yeah.
You know?
Yeah. The market tends to be a little bit more volatile.
Yeah.
Adjust more quickly. Cap rates are really slow to adjust. And honestly, from like 2022 to now, cap rates in our market haven't changed that much. I mean, the rental demand is still incredibly high.
Do the burr.
Yeah, I mean, returns are returns.
Right.
You know, so.
And the rents keep going up.
Yeah, exactly.
Yeah, it's expensive. I mean, I think even Springfield, Massachusetts is saying, like, Springfield specifically wants to build 41,000 new affordable units. So the demand out there is huge. We do a lot. We do a lot of low income, like Section 8 stuff like that as well. Workforce. Cool, man. Well, I want to be respectful of your time. We know we're doing this in the middle of the day, and
of course,
we thank you so much for inviting us to the War Room. Do you want to share your info? That way anybody that's watching knows where to find you.
Sure. So you can find me at Andrew Freed at LinkedIn or Facebook, or Investor Freed on Instagram. I host local meetups. I'm a real estate focused agent. You know, we take down larger deals, so definitely give me a follow. I'm definitely happy to connect.
Everybody, I'll put his info in the bio. Thanks for checking out the WREI Talk Radio Show. Andrew, appreciate your time. Guys, we'll see you on the next one. Peace.